waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high, watching the candles reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge, finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets called. Balance face draw down, standing strong through it all. Risk defined, profit inside. Seacrest Markets guiding every step into the light. Seacrest Markets leading the way. Making a move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Let's talk execution, let's talk speed. The crystal clarity is what we need. Some is action, just the price as I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance base draw down, standing strong through it all. Seacrest Markets leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights and the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. We're the new era, the elite of a screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard inside. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision. We are the flow.
Good morning and welcome to Seacrest Markets Live, Monday the 16th of February 2026. I'm going to quickly move my camera because I just realized you can see my daughter's piano in the background and you don't need to see that whilst we're breaking down the markets. Give me 1 second, please. I didn't even realize my camera was over there. Welcome everybody, welcome. So, what a weekend. Love was in the air. Everybody was overindulging in celebrations and romanticisms. I hope you had a great weekend, regardless, whatever you were doing, whether it was with friends, families, or loved ones. But markets were definitely interesting last week, weren't they? I think a lot of the shadows over Davos, we're still talking about the Greenland effect, we're still talking about the Fed hazard pivot. And we're seeing sell-offs. You know, we're really starting to see these markets kick in to the downside. I know we look at the markets today, you can see if I zoom in on the daily that we're starting to get that push back up. Last week, the indices didn't fare so well, which we'll cover on in a moment or two. Now, very much a quick overview on general markets. Let's have a look. Right. So we're starting to see a post-data washout. Now, last week's clearing of the US government data backlog, as well as the subsequent NFP shock, or at least the release of the data, what we're now seeing is a divergence between recovering hard assets and the tech sector, which, as we discussed last week, was very much starting to move into a bearish correction phase. So how do we position ourselves if we're trading indices? Now, obviously, we're going to have to factor in other macros, other geopolitics. We still have to take into consideration the SaaS apocalypse. And what we also need to factor in for this week is, specifically today, we have a US holiday. We've got the President's Day over in the US, which for them is a bank holiday, which will mean that liquidity is going to be thinner. Yes, European markets are still open, and we are seeing the DAX and the FTSE slightly higher this morning. And based on the websites that I was looking at, it looks like it's predominantly the miners that are leading the rally higher. So I do expect markets to be a little bit quiet today with the US being shut. Doesn't mean that we won't see some moves early on during this European session, which we've already seen. However, coming into the US, it's pretty much shut up shop, close your laptop, close your screens down, go and do something else for the day if you are just a trader. Now, if you've got a full-time job, don't worry, just carry on doing what you're doing. And same for me. Me and my team will continue to operate and work pretty much throughout the day. So nothing changes for us. If anything, it's pretty much foot to the pedal until the end of this month, because of course we've got a lot of stuff going on in the background. So the reason there's always a reason why I start by breaking down the macro picture. And it has to come down to the fact that where I predominantly have exposure into indices or equities, I see that as the main barometer to understand the landscape. Now, of course, the good thing about the macros is it will bleed out into your FX crosses, your majors, your golds, your metals, etc., etc. So there's always a calculated reason, right? We have to understand what's going on in the markets before we just execute a trade, and before we break them down from a technological perspective as well. So throughout this live stream, we will break down the indices, or some indices. We will break down the DXY and euro dollar. We'll take a look at maybe some yen majors, i.e. dollar yen, and then we'll go into the metals. We'll break down with Bitcoin. And if there are any comments, questions from any of the viewers, throughout this live stream, or reverting back to some existing comments that have been posted on the recordings, and I'll break them down throughout the call as well. Now, overall, and the main kind of goal is to provide you with information and provide education to hopefully help you go and, in isolation, make unique ideas and generate your own ideas and trade ideas from the back of that. This is purely for educational purposes. There is no advice provided, and there is no remit for us to provide you with any trading signals. It is purely for, I guess, entertainment and educational purposes in its pure form. If anyone's got any questions, please feel free to ask them throughout this session in the comments. If you haven't already, please like, subscribe, and turn your notifications on for these live streams, because it does help Seacrest Markets reach more people and help them to provide better understanding of the way these markets are being broken down on a daily basis, so that you can take advantage of them. Now, I want to start with macros and geopolitics. I know I've given a pretty much a significant overview of the environment, but what I want to really look at is these three areas. My thumb didn't want to go up. The employment shock last week from non-farm payrolls, the SaaS apocalypse to help us understand the indices, and then I also want to look at what's going on this morning. So with it being obviously fairly thin in the markets, I'm expecting the European sectors, so the DAX and the FTSE 100, to be fairly volatile and trade fairly thin, and that will leak out into other areas. So FX, so for example the pound, the euro, and of course your dollar majors as well, and then it will also leak out into your other areas as well, including gold, silver, so on. So if you are trading today, or if you're listening to this recording and wondering what happened in the market, well, hopefully this gives you that information. So if we talk about NFP, and the reason I just want to recap on NFP is because the report came in at double the estimate. It came in at over 130,000. So what that's effectively done is it's killed any narrative of a recession in the US. And it shifted the Federal Reserve to delay their next rate cut and the expectation of a rate cut from what was originally June to July. Now, I know I mentioned this last week, but it's important that we really recap what happened and what goes on and how that potentially translates into moves within the market. Now, if the recession has been killed, or if the narrative of the recession has been killed, and it's pushed the Fed's expectation back from June to July, we now need to see other macroeconomic data points support higher prices in risk, so in the indices, in stocks. Because at the moment, whilst we're seeing growth in the US, and whilst we're seeing subdued rate cuts, the market is still uncertain of what's actually going on. We're still, like I said, having that battle between hard assets and risk. And the third leg of all of that is transferring capital from the markets, from investments, into cash, because they would rather potentially lose out on some gains rather than have exposure to a significant drop in the market. Now, one thing that also needs to be said in that comment is it's not just how you time the market, it's about being in the market. And when you look at the average peaks and troughs of the position, now, of course, historical price movements aren't a guide to future price movements, but it gives us a good indicator that the markets should recover, should provide a consistent return over a longer period of time. Now, the reason I say that is I see a lot of people that try to time when they're in the market and when they're in cash, or when they're keeping their powder really, really, really dry. But what that also does is, because they're trying to base their ideas only on their own information and what they're driving from it, they miss out on moves. You know, we saw it during 2020 when they were pulling capital out of the markets due to COVID. We see it time and time again. So do what you need to do, but try not to kick yourself if you go full cash and you miss out on a significant move because you believed it was going lower. That's why the majority of people this day and age will just try and, for example, DCA into an ETF and look for between 8 and 11% roughly, from the S&P, because they're concentrated into the S&P and they can focus, right, X allocation into this. I pay sales charges rather than commissions. I don't have swaps, but I do have rebalancing, etc., etc., etc. So there's a number of different factors, but for most people, it's just a lot easier to stick their money into an ETF. But where it really becomes, I guess, into its own, and where you can become into your own, is really trying to understand how to day trade, how to position trade, and how to really take advantage of value areas or areas that are potentially requiring, or where you could seek beta or beta if you're American, right? But time in the market is much more powerful than timing the market for the majority of the time. The two can go hand in hand, but it's a lot more difficult. So the second point, actually the third point I've discussed this morning, I've discussed the NFP, and now I want to talk about Anthropic's Claude Co-work enterprise tool, which was last week triggered a massive sell-off in software giants, so Salesforce. And what it's doing is it's seeing that investors fear that AI is going to cannibalize seat-based subscription models. So there's this fight between who's going to come out on top between these subscription-based models. And clearly with the co-work from Claude, which is a lot of, so I've been doing a lot of work outside of working hours during the nights and looking at, again, outside of other things that I do as well. I've been looking at Claude, which obviously also has Clawbot. I've also been looking at Claude Co-work, and I've been looking at specific AI models to really understand how we compare them with, and I say compare, not compare what these co-working AI modules will help us to do in our business operations. Specifically, how do they, create better automations? How can they support our code base? How can I as an individual speed up coding projects? And how can members of our team implement and add this to their products and projects as well to deliver more efficient operations 24/7? And so it's definitely a very interesting time. Like so when I get time and when my family go to bed and I've wound down for the day, I'll take a look at the new AI companies that are out in the last few years. I'll look at how they model themselves, what they're looking at, and realistically, am I positioned in them? How do I get positioned in them? Where is the robotics industry going? What new regulations are coming out? Are there any new changes to existing regulations, be it FINRA, obviously being part of the future side on the US bodies, whether it be the FCA, whether it be the FSCA and the phase agreements. And it's all about understanding, how do we continue to drive the best services and supports to our users on a daily basis? And that's really the goal. So whilst internally, look, a lot of these companies from a SaaS and an AI perspective are having this kind of battle, we are only trying to figure out what products to use. So we're in a very good position. And I guess that's the majority of users. Majority of companies are now trying to think, who is using what and for what for, and who's going to come out on top. And that, as a stock picker, is a highly regarded skill. But they're the three things that realistically the market is trying to digest this morning. President's Day, low volume, high volatility, the SaaS apocalypse, and the NFP data last week. The news has come out, so realistically it's baked into prices now. But what we're trying to understand is what happens next. Where does the next 3 to 6 months lead us? Will companies continue to produce better quarterly earnings? Or which SaaS companies or which AI companies are going to come out on top, right? So they're the things you need to think about. And then again, manufacturing companies, robotics, tech companies, whatever companies you want to be involved in. If it's a dividend paying company, do you really want to be involved in dividends? Are you getting the best growth if you're a certain age? Blah 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 blah. Anyway, I won't bat on too much about that because I know you focus more on day trading. So let's take a look at the DXY and yen, and we'll also break down. Actually, let's break down the indices first. Let me give you some chart stuff because that's what you want to see. You want to see some charts. So let's talk charts. All right. So realistically, the S&P is very volatile at the moment. We're seeing 6,800 be a barometer of support. We are starting to potentially see that we could get a pushback towards 7,000. And I know I'm a little bit biased on the indices. I always want to see the indices higher. So I want to see 7,000 tested. I want to see 7,000 plus. I want to see 7,000 being the support. And I want to be involved in that move. But I did discuss last week how this low here at 6,723 is potentially deemed or considered weak because we failed to take out that previous high. And this was the pullback from that high. We had a lower high in the market. Expectations were for price to come back down into the low. Ideally, we wanted to see if that market could actually trade lower and trade into 6,730, 6,740s. It looks like right now we're respecting that low and we're trading in the demand area of the overall move, and we'll see that as we break down into the 4 hour, 1 hour, and we'll go down into the 15-minute and lower time frames as well. So if you look just to the left initially, we've got this area here, which is that initial sell to buy with inefficiency in price. So where there's a gap in price, when we go down to lower time frame, you'll see that we've probably got a large bullish Marabuso engulfing candle. It's going to be very big. Alternatively, there'll be some form of gap, and we'll break that down accordingly. But we've already done that from last week, so we'll just take a quick look. Now, that is called an inefficient market. I know some communities out there now call that imbalance, or they call it IFVG. I don't know IFVG's terms, but there's different terminologies around it. But what it basically shows is that market expanded quite voracious up to the upside. So very big, expansive move, very bullish to the upside. And what it has left is an area of inefficiency because the candles are creating a huge gap, which again is imbalance, or it's this IFVG. So we can see that market has retraced back into that area to fill that inefficiency. If you look at the low of this wick, it's come in to fill that and some, 67.93 is the low roughly of that candle, which also aligns with the high of this previous doji candle on Friday, the 6th of Feb. So markets traded back in and we've reacted from that. Now on Friday, what we were discussing is these buy to sell wicks inside. And again, as we drive down to the lower time frames, the price action and the specific candles get a lot cleaner. But now all we're doing is we're just holding this level. So is this level just providing us with a chance for the market to catch up, a chance for buyers to catch up and drive prices higher in towards that 7,000 level? Now, as we approach 7,000, in and around 6,960, we have that extreme supply, that extreme area of resistance. And that could hold. But again, realistically, we're trading inside this massive range, right? So we've got lower highs being printed, we've got higher lows being printed. So you have to bear in mind that both sides of the wedge are weak. And the more times we test 7,000, the weaker that psychological level becomes, thus meaning that we'll see more buyers stepping into the market to trade above and through 7,000. So even though we do have that support, that supply resistance level sitting up at here at about 6,960s, we'll just call it 60s, around the 60s for now. As we approach that level, I wouldn't be surprised if sellers start to step out of the way, because markets are in the end going to want higher. The question is when. So just be careful as we trade up into those levels. Again, another caveat to that is, when we trade into this resistance area on the lower time frames, if we start to see the front leg develop and demand starts to fail, supply starts to take in control, so your support stops reacting, your resistance is holding, we can look to exploit that intraday position and actually get involved. Now, that will mean looking at your own edge, following your own rules, and understanding your own methodology. Whatever confluences you have in your own trades and your own method, that's how you need to do it. It's not based on something or a comment that we discussed during this call. I'm sure the analytical breakdowns will help you to make informed decisions, but by no ways, shape or form are they supposed to provide any guidance or any advice into how you actually execute in the market. So let's go down into the hourly, which is also the 60-minute. You can see that level that we were referring to a little bit earlier. It had that nice reaction to it. It swept a little bit, but failed to break below. So again, just a fake breakout, just to rebalance price back into demand, and we've traded higher. So if volume's going to be very thin, and bear in mind this is a US indice, it will more than likely, unless we get some big punters come into the market to shift price around, it will fairly likely correctively trade throughout this session into tomorrow. Ship Wi-Fi has been down all morning. I mean, first world problems, Anthony. First world problems. Being on a ship that has Wi-Fi, first of all, and being on a ship in general whilst everyone's in the office. How the other half live, my friend. So yeah, expected markets to range out unless some big punters come in and try to push us out of the way. Let's jump down into the M15, see if there was any trades this morning. Again, these were trades from last week, and we can just see how the analysis has played out. We had that push up from Friday, so our expectation was for price to come back into this area, trade off of this into this, and then continue to trade up. Alternatively, you use this as the move to break lower and then continue looking for your lows. I mean, when you look at this move here, we had a sweep of this move, which obviously took out all of the supply to the left. We then traded up, traded into that supply high, that range high of that particular decisional supply level, trades back in, and then we pushed up. So what time was this? This was Friday at 8:30. So more often than not, no one is taking any positions coming into the weekend at this moment in time, because there's a lot of risk, a lot of gap risk that we could see. Let me just put that. There's a lot of gap weekend risk. And also, just as a confirmation here, you can see this black horizontal line for those of you who's viewing the charts. This is your point of control. This is where the highest concentration of volume was throughout that trading session. And as you can see, price has respected that level, which was a previous area of support, previous area of resistance, and price has really concentrated around that area. So it isn't surprising that the market has traded off of that level and really engaged in higher prices. But for now, I've got nothing to say about this. I'd like to see further right-hand side reactions on this. I mean, if we can trade up into 7,000s and beyond, then let's do it. You know, Toy Story 5, Buzz Lightyear, let's go. Let's go to infinity and beyond. But pretty much, you know, that's the S&P for you. Obviously, we can now go into the DXY if you do so wish to. Any comments, queries you've got, please feel free to jump them and send them in. I'm happy to answer anything you might have. So let's look at DXY. First of all, let's go out to the daily because there's no point looking at lower time frames. Now, very, very corrective PA. I'll zoom in because even on this 32 inches, tiny. So you'll see that we've got your basic pattern, and that pattern is obviously started to invalidate. It's gone trade out to the right hand side. There's been no expansive move to the up or the downside. We can of course look to see if we can alter the technical pattern to identify if maybe anything else is starting to develop out. But over the course of the last 4 days, to be exact, we can't count this day because we're still trading in today's session. 4 days of very corrective, indecisive price action. We have what is deemed initially on the first trading day of that session, the 4 sessions here on the Tuesday, we have almost a hammer, which is usually utilized at the bottom of a trend, and it signals that a reversal is coming and we're going to trade higher. But in this particular situation, it's been invalidated because the previous trading day, or the following trading day, sorry, which is the Wednesday, we have a doji. Now, typically, this would be deemed as a dragonfly or a long-legged doji. Very, very small body, very, very long legs. Again, further signaling indecision, but also it just signals that there's a balance in buyers and sellers, right? Moving out to the 3rd day, which is the Thursday, another inside day. So we've had an inside day from your previous 2 days. Prices originally traded higher, it gapped up and we've traded down. And we closed down on the day, again signaling another doji inside day, another indecision day. And then on the Friday, still an indecision candle, but a little bit more prominent. It took out the previous day's highs and it's tried to attempt to trade lower. So it's still an inside candle, it's still an inside day, but the body obviously, it's not vanilla, okay? So it's not a perfect inside day, but price is contained overall on the previous trading days. We've got indecision all the way along. Now today, we could, even though the US markets are closed, we could, in theory, actually get this market kicking again. It's highly unlikely. I expect another inside day, another low range day. It will be volatile. If we get punters, we could actually see price kick on. But I mean, I'm not going to hold my breath. I mean, I'm just going to jump straight down to the M15 because this price action on the DXY is like, look. So you can see we held the lower high, but what we did is we broke to the downside. Oh, wait a second, sorry. Let's get this a little bit cleaner. So we had this. So we had this break to the downside. We corrected back in. We respected supply. We've then taken the low, and now we're trading on the... now we're trading into this resistance, which... I mean, any technical analyst will just do this. Oh, it's now this. You know, so what I will do is this. Give me 1 second. We'll then utilize this as our next level. Because if you look, we have an equidistant channel that's now being formed, which an equidistant channel just basically means it's a horizontal channel with equal lines either side. So that means they're equal distance from one another, okay? I mean, it does look like it's slightly fanning out, more like a megaphone pattern ever so slightly. If you can see, this one's slightly weighted out, this one's slightly weighting down. So it looks like it is expanding. Now, from here, we've got a couple of theories. Do we trade up into the extreme? From there, do we trade down and trade lower? Do we trade down, respect, trade higher? So do we just continue trading inside this equidistant and just creating higher prices, right? Do we break out on this move, which we can consider? Do we trade up, then fail, then continue to trade lower? Do we trade up, trade down, retest, continuation, and then look for lower prices? So again, 6, 7, 8 potential variables. We don't predict price, we react to it. Okay, now we can utilize charts, patterns, forecasts, predictions, how you do so wish to, but you never predict what a market's going to do. You proactively prepare and react. That's it, simple as. You know, and that's why we have to wait for additional confluences. We don't want to necessarily be selling into the price trading higher unless we've got such a big powder that we could keep it dry for as long as possible. Again, same comment always hits me in my head when I say things like that, to help you remind yourself that the market can stay irrational longer than you can stay solvent. We're also looking at the DXY. Do we want to be getting long? Do we want to be getting short during this kind of sequential market period? Probably not, right? The dollar is neutral versus the yen. We're seeing consolidation in the euro dollar. We're seeing neutrality on gold, and we're seeing Bitcoin being bearish. So we want to wait for, if you trade using different instruments as your confluences, you want to wait for additional confluences. Now, obviously, if you're looking at the DXY going long, it means you're going to be shorting the euro dollar, but you may as well not be doing any of that. Now, anyway, you can't actually trade the DXY, so you'll be trading euro dollar. So you want to be short euro dollar, that's what you're going to be trading. If you want to be long euro, then you're going to be short the DXY, right? Based on the fact that the DXY is formed up of about 57% and change of the DXY. So for me, we're trading inside resistance, we're trading inside supply, we're also trading inside this equidistant channel. Now, because it is US President's Day and there will be a bank holiday in the US, or there is a bank holiday, I feel, and again, I don't trade on my feelings, but I feel like we could just drift higher. Then the US market may open tomorrow and we'll start to get that pushed down. So today will be that form of esoteric, easier markets, very like trading Asia, you know, very simple, very efficient, and we'll range higher because no one's stepping in with any significant size volume to direct the market. So that will be, you know, my guess, a corrective formation. And now that correction could drift to the downside, that correction could drift to the upside. I'm not here to predict what's going to happen. But we are trading into that 97 handle, which is a psychological level. So unless we want to see some form of manipulation around those areas, because people are going to want to try to force price up above that 97 handle, which doesn't look like it wants to go just yet. You know, we're trading just under that by 98s. It's going to be a slow day. So let me move out into euro dollar, which will be the inverse of the ideas of what we're talking about here, just to show you what's going on. So the DXY was moving higher on those previous two candles, and the euro dollar is moving lower on these two candles as well. A very range bound day overall, right? It's not exciting at the moment. Look, we've got these and we got this, and like I said, these patterns are just here to give you some visuals. These patterns are here to just give you some visuals at the moment. So let's go back out to the daily to give a full top down technical analytical perspective. All right, so January, break of the high. Expectations would be initially for a pullback into either this decisional, which we got, or into the extreme, which we haven't got yet. Doesn't necessarily mean it's going to happen. The decisional level could be satisfactory for prices to feel higher, although it doesn't look like it wants to. If you actually look at the way this price action is, this does look prime for a bullish breakout. So very bullish leg up, correction, trade up, correct, trade higher. Initial trade target would be 120.85, so let's say 121, give or take. Correct, push up, correct. I'm just trying to see if there's any price action recently that actually gives you the same indication. This is quite the same. So we have that initial push up, we have a fairly rounded pullback, and then we push higher. So that is in theory what I'm trying to look for in this move. So I'm trying to look for this. So expectations would be for price to trade higher on the daily at the moment. It's fairly flat on the 4 hour. Pushed up, new front leg, lower highs, lower lows. We traded into this, we reacted off this, we created this. This, the 4 hour, which it paints a little bit of a different picture. We've had a push up. We've taken out all of this liquidity or these structural areas from the original front leg of this move here, but we haven't came back into any structure on the right. So that this leg here has got no structure. We've had a pullback into the moving average, but we've had no clear pullback into an area of support or an area of resistance, previous resistance that could potentially be utilized for us. And we're very corrective. So the 4 hour paints a slightly different picture, that maybe we want to pull back into something here, then start to find our legs, and then we start to break out from that move. Again, we wait to see what this candle does, or we wait to see what happens inside this 4 hour pattern. Lower highs, high lows, very corrective. We're starting to get into the pointy end of the wedge, so we are obviously going to be looking for how price expands out of that. But because of today, we could just get no volume, no volatility, and it just continues to drift. So that could definitely happen. Let's go down. Let's go down to the M5, because we've done the M15 when we first started, right? My neck's beginning to hurt. I need to move charts. 1 second. All right, so we've got sell to the buy, we get the reaction, so we've got that demand there. You can see it barely misses it, reacts off of the low. High, low, lower, high. So we are really ranging. There's a lot of volume in and around here. You can see it. Resistance, support, resistance, support, resistance, resistance, support, breakthrough, some resistance, support, support, support. I mean, it's just a horrible market. It may be a close your screen, come back tomorrow situation, because there's no volume. No volume at all. You know, we're range bound pretty much between 117.50, which is a lot lower down on the higher time frame, and 119.20 again. So bearing in mind we've got that support down here and we've got that resistance up above, we get a breakout and we get the confirmations we need. I wouldn't necessarily trade your first move. I'd look for like this, and then I'd look to get long, and the same for the downside, right? I wouldn't necessarily take the first breakout. I'd be looking for the next, and then I'd be looking to trade off of that, because that's the confidence we need in this market condition. That's also the confidence we need, because we're seeing lower volumes. But again, being the US market is closed, why would we want to put ourselves in a position where we're exposing ourselves to low volume? It makes it harder to get out of a trade. It makes it harder for us to trade in profit, and it also makes it harder for us to get out of drawdown if we're in a losing position. You really want to wait for volume to kick in. So if I were you, bearing in mind as well, in UK and Europe right now, it's the half term. So the schools have already broken up. They had 6 weeks at school already. They've already broken up for their half term, which means there could be some parents going on holiday this week. I know some people in this stream are on holiday this week. So maybe this week you take it a little bit easier, just maybe, until at least the US market comes back, because we've got a lot against us. One second, my charts just froze. All right, so a couple of discussions we had Friday last week were for breakouts across the market, specifically in gold now. A couple of scenarios. We had the break to the downside, continuing to push lower, and we had the break to the upside, continuing to trade higher. Now, what actually happened was a break to the downside. We then traded up. We took out that previous highs that were struggling. We then based. We created demand. Demand took control. Supply kept failing, and we kept trading higher. And this is why I always talk about the fact there is at least 6+ variables of how patterns can trade out, and not just to trade a pattern for what you see it, i.e. it breaks out to the downside, we get short. This particular scenario would have had you take a loss, and that's okay to take a loss. That's not the issue here. The reason is when markets and patterns break out, you don't just want to take the breakout. You want to see the market show its hand. And in this scenario, had you have waited for a breakout, a retest, a continuation, you wouldn't have got it. So you would have stayed out of the trade. Now, if you are just a breakout trader and you're scalping, you would have got this, and this would have taken a couple of little positions for you. You'd have made a couple of percent, and then you'd have hopefully taken off, and trade would have then traded back in. But you don't know when the market's going to reverse. You don't know whether a level is going to hold. You don't know whether your confidences are going to be respected. You don't know whether that initial trade is going to be respected. So all you're trying to do is stack the probabilities in your favor, stack the confluences in your favor, and then execute your edge as best you can based on probabilistic edges and mathematical edges. That's it. There's nothing more to this. Probabilities, mathematics, psychology. Once you've got your edge and your psychology completely locked down, focus on risk management and just manage the trade. Know when to trade, know when not to trade, know when to be at your screens, know when not to be at screens. And remember, the market will always be here tomorrow if you're scared of missing out. Just have to remember that there's no need for FOMO. But when the markets are good, you need to get involved. So market came back in after the breakout. We retested that level, but we had no confirmation that supply was taking control. Okay, supply was held in here, but so was demand. You need to negate all of this. After we had the breakout, you need to look at, okay, what is here supply? That's supply, which is also resistance. From there, we need to see ideally another break for supply to come back and confirm itself. Once supply comes back here after this break and holds and we start trading away, then we can start to look maybe for a short in that leg. Of course, we didn't get it, so we don't take that trade. It's simple as. Then what happens? Price trades up. We use this as liquidity. Demand is respected. We then look for a further break. Demand comes back in, gets respected. We then look for longs from here. We had confirmation that the demand was in control. 1, respect. 2, respect. We trade higher. Whether we get in down here or whether we get in up here, it doesn't matter. Where we put our stop matters. How we get out of our trade matters. Did we get 1-to-1 on this trade? Yes, we did. Did we get a 1-to-1.5 on this trade? I don't know. Yes, we did. About here. Near the top, I mean, you wouldn't have known it was the top if you were holding a fixed 1.5 R. You 1-to-2, you wouldn't have got. If you had held your remaining 10-20% in this trade, coming into today's market, you would have been stopped out on that about here. Or break even on the last position, up to you. Doesn't matter how you manage your positions, as long as it fits your edge. Again, trades higher, closes the weekend, opens up on Sunday with gap risk to the downside. So what does the market first want to do? It wants to fill the gap. We fill the gap as much as we possibly can, about 50% of it. We trade lower, we trade higher, and then we commit to the downside. Now, my neck, sorry everybody, my neck's absolutely killing me. We trade lower. I'd like to have seen us come back into this. We didn't quite get that, so it doesn't matter. Horses for courses. We trade lower, we come back in. Is supply really going to hold? Don't know at this moment in time. We start to commit to the downside. Maybe we could have looked to get short inside this to push us back into this point of control. No harm in doing that. And then what happens? I mean, really, we're just holding on to this. It's no significant move, really. Price fails to trade any lower, we trade higher, and we start to get on the front leg demand taking control. Could have looked for longs inside this, but again, trading into the point of control. Low volume, very thin volume because the US market's closed. Traders are going to be fairly cautious. Fairly cautious today. Again, I've reiterated this throughout the majority of the pairs. Let's look at Bitcoin as we wrap up. There's not many questions, so hopefully the breakdowns have been sufficient for you all. BTC, USD. So again, since January, we traded lower. 63,000 was our demand level. We're now basing. We're now, if you look at Wyckoff theory, we're now, of course, starting to cause either an accumulation or a distribution. To me, this is more an accumulation, just because we're trading off of support. However, the fact is we're trading bearish, and this looks like it wants to be quite an aggressive ascending trend line. It's not at your 45 degree, so I don't quite like it, but it does look like it's creating higher lows to break them. Okay, so it's temporarily creating demand and control to trade lower. But again, I'm another advocate of long Bitcoin, so even though I'll be unbiased in my analysis, I don't want it to go lower. So if we go down to the M15, quite easily you can see that we are very much ranging. You know, we are slightly putting in higher lows and we are slightly putting in lower highs. But if you look here, we have broke out. That's not really anything convicting today, if I'm honest. You know, US markets are closed, so anything can happen. What you want to see from here is price respect and then kick on. And this is where I start to be a little bit more comfortable in placing longs. I don't envisage. Hello, Sloth. How are you doing? Good time. Good to see you. Long time no see. Very long time no see. How's everything going on your trading? Supply side is obviously being respected. Demand side is being respected. Let me just grab this actually and expand it, because you can see that we're at the upper echelons of the range. So this is the range at the moment. From here, you have a decision to make, and you can wait for the market. You don't need to predict this. You want to see demand hold, price kick on from here. There are, again, 6+ different ways this could happen. I know I just put 5 hand fingers up, but that's it. And from here, you want to see this. Now, being the fact that your supply side is going to be weak and your demand side is going to be weak as well, you can obviously look for shorts back into this level, and you can look for longs back into the highs as well. So just bear that in mind. Considerations being US markets closed, your highs are weak, your lows are weak. I want to see demand take control, or I want to see supply take control for us actually to get confirmation that we're going to get long or we're going to get short. I won't be taking any trades without those confluences, because you're just trying to hand money to the market without the market showing its hands. And by all means, you can trade how you wish to, but please try and stack probabilities in your favor before you get into a position. Breakout, retest, continuation. So if you're going to take longs without taking this supply in, then you want to be seeing this respect. You want to see a break again, and then you want to see it come back in, and then maybe we could look for a long from, I don't know, from this retest up and around 68,400s. That would essentially be what you're kind of looking for. Attacking FTMO challenges right now. I found this channel recently. Unfortunately, I missed these kind of lives, mate. How are you? I'm really well, thank you very much. So for those of you that are just tuning into the stream, it's actually our lowest viewing attendance so far. In the previous weeks, we're trading up around 250 viewers, 160 viewers. So this is a low viewing count today. And actually was quite low on Friday as well. Maybe it's because of a number of reasons. But I host these live streams Monday through Friday, as long as they'll have me. Monday through Friday, every day, breaking down multiple instruments, multiple asset classes, from indices into metals, into FX, into cryptos. We discuss the macros, the geos, the fundamentals, and every other asset you could possibly do. Questions and answers are encouraged throughout the session, and any questions you've got, I'll answer them to the best of my ability. So please feel free to do those, and any comments you have, please feel free to leave. Please like, subscribe, and turn your notifications on for this channel, because obviously it helps me, it helps our reach, and it helps to spread the education and breakdowns across the marketplace. Without the FUD, without the fear, and without the need to justify materialistic items, we're here just to focus purely on the markets and break them down to you as we see fit. If there are no further questions, we are pretty much coming towards the end of this live stream. I'll hang on for a few more minutes, but I will go silent. I'll mute my mic, and I'm just going to do some other things. If any questions come in, Happy to answer them before the close of the hour. If not, and there are no questions, please feel free to leave the stream. Please like the video on whatever channel you're on. Please retweet it. Please share it across YouTube, Facebook, Instagram, and whatever other X platform you're on, including X, etc. And that's about it, really. So I'll go quiet for a few minutes. Okay, so seeing as there's no further questions, I look forward to welcoming you all to the live stream. If you're watching the recording, please try and tune into the live streams. They're hosted Monday through Friday. Every day, none other than myself will be hosting as we break down the markets on a geopolitical basis, on a fundamental macro basis. We also look at micros when we discuss corporates, factoring in the MAG 7 and the MAG 70s when we look at the US indices to help us direct and understand what's going on in the indexes. We also take a look at the DAX, sometimes the FTSE. We break down the DXY, the euro dollar, and maybe other FX pairs, majors, crosses. We take into consideration metals, gold, silver. We traded the run up, we traded the downside. We look at Bitcoin, we traded the run up, we traded the downside. And we do that here. We provide the analysis, we provide the ideas, we break it all down for you so that you can make informed decisions. But for now, as always, as I end the stream, trade smart, trade safe, trade Seacrest, and I'll see you this time tomorrow.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check. Seacrest Markets, light in the dark.
Seacrest Markets,